Hey everyone, welcome back to Corporate Decoder, the place where we take complex financial documents and make them make sense for you. This report from Core Scientific Incorporated is certainly a wild ride, especially when you see where they are heading next. Alright, so Core Scientific Incorporated released their latest quarterly report, and buckle up because things are looking dramatically different for them. Now they are a leader in digital infrastructure for high-density colocation services and digital asset mining. But get this, they are making a huge strategic shift away from Bitcoin mining and towards services for AI and high-performance computing workloads. That is right. They are repurposing most of their facilities from crypto mining to AI stuff. Let's dive right into the numbers, starting with their balance sheet. Things have certainly shifted significantly from December 2024 to September 2025. Take a look at their cash and cash equivalents. For instance, it dropped from over $836 million to about $453 million. That is a big chunk of change gone, and you also see a huge increase in digital assets from about $23 million to over $241 million. That is a massive jump, showing their focus might be changing, but also their holdings. Speaking of digital assets, my goodness, look at the change here in September 2024. They had digital assets listed at just $38,000. But by September 2025, that number is over $241 million. That is a staggering increase, and it really tells you where their focus is shifting or how their holdings have been managed. Now let's talk about their physical infrastructure. Their property, plant, and equipment net has jumped from around $556 million to over $1 billion in just those months. This massive investment and expansion is clearly tied to their new strategy of building out colocation services for AI and HPC workloads. Moving on to their income statement, which shows how they performed over time. Things are pretty interesting here. For the 3 months ending the 30th of September of each year, total revenue dropped from about $95 million in 2024 to $81 million in 2025. That is a decrease. But here is the real story. Look at the segment breakdown: digital asset self. Mining revenue dropped significantly while colocation revenue more than doubled. This shows their strategy shift is starting to bear fruit revenue-wise. Their cost of revenue also decreased, but not as much proportionally, leading to a change in their gross profit from a small loss to a small profit. Now the big kicker here, selling general and administrative expenses have skyrocketed. They went from around $40 million to almost $69 million for just the 3-month period. That is a huge increase, and it is driven by things like colocation startup costs and merger-related advisor fees. That is a clear sign they are heavily investing in growth and future plans. And what does all that mean for their bottom line? For the 3-month period, their net loss actually got smaller from about $455 million in 2024 to $146 million in 2025. That is a massive improvement in terms of loss reduction, which is good news even though they are still losing money. This line item here is a dramatic example of market swings and how these financial instruments can impact a company's reported performance for the 3 months ending September 2025. This changed by nearly $75 million, while in the prior year it was over $408 million. That is a huge swing and shows the volatility in the value of these warrants and rights they hold. Looking at how their stockholder equity has changed, it is a sea of red with accumulated deficit growing, but they are issuing new shares through warrant exercises and stock-based compensation, which is common when companies are in growth or restructuring phases like this. Now let's talk about cash flow from operating activities. They actually provided more cash in 2025, close to $125 million compared to around $29 million in 2024. This is positive news, suggesting their core operations are becoming more cash flow efficient. But where is all that cash going? Look at their investing activities. Their purchases of property, plant, and equipment went from about $66 million to a staggering $454 million in 2025. This is a massive investment in infrastructure, primarily for their new colocation business. On the financing side in 2024, they had significant inflows from issuing debt and stock, close to $447 million from convertible notes, plus other financing activities. But in 2025, their financing activities show a net outflow of cash, meaning they spent more on debt reduction and other payments than they brought in from new financing. That is a sign of mature operations or a shift in strategy towards paying down debt. Let's break down that revenue decrease a bit more. Digital asset self-mining revenue dropped significantly from $68 million to $57 million in the 3-month period. This decrease is driven by fewer Bitcoins mined due to fewer miners deployed and increased network difficulty. But the higher average Bitcoin price did help soften that blow. On the flip side, colocation revenue is booming. It jumped from $10 million to nearly $15 million in the same 3-month period. This is directly from their new strategy of building out AI and HPC data centers. And remember that sky-high increase in selling general and administrative expenses, that is where we see the impact of investing heavily in these new colocation sites and preparing for the merger. With CoreWeave Incorporated, it is a lot of money being spent to build for the future. The increase in loss on legal settlements to over $15 million in 2025 from a smaller amount in 2024 highlights the ongoing legal challenges and costs associated with their past and present operations. Now let's look at the risks and opportunities. This report has a whole section dedicated to the risks associated with their proposed merger with CoreWeave Incorporated. This is the big one. The whole deal is contingent on many things going right, including stockholder approval and regulatory approval. They could be facing lawsuits that delay or even stop the merger altogether. And if the deal falls through, it could seriously hurt their stock and future business. And get this, the shares our stockholders will get in the merger with CoreWeave will have different rights than their current Core Scientific Incorporated shares. Also, CoreWeave has a multi-class stock structure that concentrates voting power with its co-founders. That means our say in the company might be very limited after the merger. This is a really positive note. All their contracts currently have terms under a year, which means they are not locked into long-term obligations that they might regret later. Looking at market risks, the price of Bitcoin is a huge factor for the 3 months ending September 2025. Bitcoin prices ranged from a low of over $105,000 to a high of over $124,000. That is a lot of volatility, and it directly impacts their mining revenue. Finally, let's look at their adjusted EBITDA, a measure of profitability excluding certain one-time or non-cash items. Their adjusted EBITDA for the 9 months ending September 2025 is positive about $13 million, a big drop from the $144 million in the prior year. This decline shows the impact of their heavy investments and the shift away from profitable mining. Operations. So what is the verdict? Core Scientific Incorporated is clearly in a massive transition phase. They are betting big on the AI and colocation market, which is smart given the volatility and challenges in Bitcoin mining. However, the massive increase in operating expenses, the uncertainty around the CoreWeave merger, and the sheer scale of their infra. Staff. Rupture investments present significant risks. Their path forward is exciting, but definitely comes with a high level of risk. If you found this breakdown helpful, make sure you hit that like button and subscribe for more deep dives into company filings. We also have a fantastic community discussing these reports over on our Discord, linked in the description below. So what do you think about Core Scientific Incorporated's move into AI and co? Location, let us know in the comments below. Thanks for watching, and we will see you in the next one.